Hi guys, thank you for coming to Trina's Tip Tuesday and watching today. We're a little bit early, but I know that this plays continually, and I'm just really excited to be here with my friend Dana Cummins.
Hello.
She's with Movement Mortgage, and our July series is home buying and the buying process. And Dana is great with first-time home buyers. We've been friends for a long time. We're also workout buddies and bike riding buddies, and she is always on the phone with her customers. You're really easy to get a hold of, and I love that because first-time home buyers need a lot of hand-holding sometimes.
Absolutely.
And she's great with that. I also need to say she's great with jumbo loans, but today we're talking about first-time home buyers. So if you have any questions about jumbo loans later, you can always message her about that, and she'll be happy to answer you. So Dana, thank you for being on with me today. I appreciate it so much. So I've got some questions for buyers. And the very first thing that I do when I get a buyer, and a lot of times they're messaging me on a property that they've seen driving by. They don't know how to start the process. So the first thing they do is see a house they like and call.
Right.
So what I do is then talk to them a little bit and find out where they are in the process, and if they have not started with the pre-qualification process, that's the first thing I do. So then I'll turn them over to Dana, and you start that conversation with them.
Exactly.
And a lot of times people want to know, how much can I afford? So how do you start with them and go through that process? 'Cause that's what the first thing they want to know is what can I afford?
Okay. First of all, Dana Cummins, Movement Mortgage, NMLS 414502. Got to drop that little
I
disclaimer
forgot
there.
you guys had to do that. Sorry.
No, absolutely no problem. So how much can I afford? Well, lenders will look at your gross income, and typically we're looking at 20% of the gross income for your housing payment and 36% for the housing plus other debt.
You're okay.
Can you stop it again?
No, we can't stop it.
Sorry.
We're live.
So it's 28 and 36%. So we're looking at your gross income versus the other debts that you have. So we typically want to see your ratios within that guideline. But that is your gross income. That's not the income that you pay your bills with. You want to make sure that you do a budget and you know that the payment works for your budget and you can afford to make that payment. So, a lender can qualify you, and I can tell you what the maximum is, but it's up to you to know what your payment threshold is.
So the other thing is buyers will be thinking payment-wise, what I can afford. And when they're renting, they know what their rent check is, and they know what all those other things are.
Right.
But when you're buying, you've got closing costs and down payment, and they don't necessarily calculate that in.
Right.
So is there down payment assistance programs that can help first-time home buyers?
Oh, absolutely. Okay. So there's a couple of different entities that we use. Florida Housing is just one of the great ones. They'll offer, 3 and 4% grants. There's a $7,500 deferred second mortgage. There's a $10,000 repayable mortgage. And also, too, they've just started a new incentive that if you purchase in one of the counties impacted by Hurricane Michael, you get a $15,000 forgivable grant. There's down payment assistance options available. And just to show how affordable it is, I just told a borrower that's closing today that they needed to bring a check for $34.11.
Oh my gosh.
So that they could sign and close and get the keys to their new home. So
that's great. And they use that?
Affordable.
They use that program that you're talking about?
They sure
that's
did.
Great. So if I have a lot of student loan debt, will I be able to qualify for a loan? Like, I'm an attorney and I've been in college for 9 years.
Absolutely.
Because I've already a lot. And I've got a lot of debt.
And you lived on college debt,
yeah.
Right? So it does depend on the program that you're going for. So if you're currently in forbearance or your student loans are deferred and you're looking at an FHA loan or a USDA loan, then yes, we've got to count 1% of that outstanding balance. So that's a problem that some people have, where having that student loan payment at such a huge amount disqualifies you from purchasing a home.
Yeah.
So if you're in an income-based repayment plan, you can do conventional financing and use that documented payment. So conventional will allow you to use that income-based repayment. But if it is deferred or in forbearance, you got to count 1% of that outstanding balance. So that's the problem that we run into there.
So a lot of times, you need to plan ahead. So when should I start the process? If I know that I have student loan debt and I want to buy a house sometime in the next 5 years, when should I actually start my process with you?
If you're thinking about buying a home, do it now, because now we're going to review your credit, we're going to review your income. If there's an issue, we have time to address it before you have gone out and start your search and found your dream home.
Right.
So it's always important to do it as soon as you start thinking about it.
Okay. What is the difference between pre-approval and pre-qualification?
I'm glad you asked that. That's a great question. So a pre-qualification is when a lender will pull your credit and will review the documentation that you've submitted. So the loan officer looks at that and says, oh yeah, you meet the guidelines, you're pre-qualified, here's a letter. I can do that. A pre-approval is when you submit all your information, we pull the credit, and it actually goes to an underwriter to be reviewed, and the underwriter issues that pre-approval. So a loan officer cannot give you a pre-approval, only an underwriter can. And not all lenders do that, but at Movement Mortgage we do.
Will you expand on that a little bit? What is an underwriter, and what are they doing? If you're already pre-qualifying me, why are you sending it to somebody else?
So an underwriter is a person, they look at all of your documentation and they're reviewing it to make sure that you meet the program guidelines. If there's something else that they need to get, they're going to condition your loan for that. So, they're doing the due diligence to make sure that you truly do qualify for the program.
I gotcha.
And if you do, they approve the loan and you can move on to closing.
Okay. What is mortgage insurance?
Mortgage insurance. So mortgage insurance is basically an insurance, and it protects the lender in the event that a buyer were to default. Typically with conventional financing, you don't need to have mortgage insurance if you're putting at least 20% down. However, mortgage insurance premiums have come down quite a bit in the most recent years, and they're very competitive. Mortgage insurance is provided by private carriers, basically. So, they're going to be in line with what the other companies do quote. They've gotten more competitive, but there's ways to avoid the monthly mortgage insurance. You could look at doing a lump sum premium, and that way it's out of your monthly payment. And that's something that we look at doing if we're having a problem with ratios or with qualifying.
Mm-hmm.
So you can pay that upfront premium. You can finance it into your loan instead of having it as a monthly line item in your payment. So there's crafty ways to do that with conventional financing. With FHA, you've got to have it for the life of the loan unless you're putting 10% down.
The life of the loan.
The life of the loan.
It will not go away no matter
Nope.
how much they pay it down.
Nope.
That's interesting.
And then if you put 10% down on FHA, you still have to carry it for 11 years. But I did hear that FHA is revising that policy hopefully soon.
Okay, that's great.
Don't know when, but hopefully soon.
Okay, so you gave me a couple of these packets a little while ago,
Yeah.
and I love them. They're the First Time Homebuyer Readiness Kit. And if you want one, all of Dana's information is going to be on our post, so you'll be able to message her and ask her for it. But you want to go through this and
Sure.
show some of your favorite things that are in there?
So what do we have in here? We have a little brochure, Preparing for Your Home Loan. So it just kind of walks you through some of the steps that you're going to need to do, the do's and don'ts during the mortgage process, as well as some of the documentation you're going to need to have prepared for the process. So that's there. Of course, my business cards, a little first-time homebuyer guidebook. And yeah, just really all of the documentation you can expect to provide. So that's key to the pre-approval process, getting organized, getting all of your documents together and being prepared. That makes the process
That'll definitely make it smoother.
Exactly. So if you do all of your due diligence up front, you're not scrambling at the end.
Okay, well, thank you, Dana. I appreciate that so much. And she's got a giveaway for us. So whoever comments on our live post or comments later, we're gonna pick somebody like on Friday, I guess, for you to give that away to. Is that okay?
That sounds great.
And it's a Arctic Zone Movement Mortgage mug. Okay. Thanks, Dana. I appreciate it. This was great information.
You're welcome.
And I know there's a lot of first-time home buyers out there that are they feel kind of stuck sometimes.
Yeah.
So it helps to have something like this and a great person like you to hold their hand.
Thank you.
All right, guys. We'll be back for another buyer episode in 2 weeks. And have a great summer. I hope everyone's enjoying it. Stay in your pools. Bye.